Hey everyone, Kevin here. I'm a real estate broker and real estate investor. In case you don't know, I'm 28 years old and I started at 18 with $9,000 and created an over now $10 million real estate and stock portfolio by investing using the strategies I talk about on this channel. But one of those strategies involves identifying inflection points when the market begins to change. Not when it has already changed because then it's too late, but when the market begins to change. And this, folks, is something very urgent that we need to pay attention to if you are thinking about getting into the real estate game or you already are in the real estate game. That is, you're a homeowner, you're an investor, whatever it is. This is something to pay attention to because this is a big shift and it reiterates exactly what I'm hearing CEOs and companies throughout the industry suggesting. First, this video that I'm about to play you and we're going to react to has to do with telecommuting and the changes it's going to make to the real estate space, what's going to win, what's going to lose. And this is not coming from somebody's opinion. This is coming from, as much as a real estate agent, I hate to say it, Redfin CEO's Glenn Kelman. I actually respect him a lot and he's got great insights here and he's giving us the data from his website in terms of where they're seeing traffic, what kind of sales they're seeing, and where they're not seeing traffic. Now, I can analyze a lot of data, and we do on this channel. And we try to even create our own data by pulling it from multiple listing services. But I'll tell you, Redfin has me beat on access to data. So let's listen in to see exactly what he has to say. And well, let's make some conclusions as well. So I'll pause and we'll react together. Watch this like we're having beer together or something, you know, like hanging out, you know, for a nice like frosted cup, like one of those schooners they have, you know, so kind of like cheers. All right, let's play it. This will be our version of sports.
Nobody was selling in March or April unless she absolutely had to. There was a sign of distress or panic in the market, and so sellers just withdrew. There weren't many foreclosures because we've got so much forbearance in the lending markets, and that.
Hold that thought right there, and I don't want to interrupt super frequently, but keep that in mind what he said. There weren't many foreclosures because we've got so much forbearance in the market. Remember what the HEROES Act proposes, that new plan introduced into the House? If that passes and we not only have 1 year of forbearance, but no adverse credit reporting comments at all, not just it can't be late, but it can't even have adverse remarks, which has been a big problem lately with mortgage forbearance, and requirements that potentially property taxes and insurance payments get covered and waived or forgiven, and that payments be added to the end of a mortgage, there won't be a foreclosure crisis. That is good. However, there will be price reductions in certain areas. Let's listen in to see exactly where those are.
That just means there was very little inventory. In April, inventory was down 25%, even though demand is nearly at 100%.
What's your take on whether or not this is the right strategy? I mean, is your forecast that the market will dramatically improve? Because that effectively is a bet on the consumer, is a bet on the economy, and a bet that this historically high unemployment rate will return to normal.
Well, I think it's a tale of two economies right now. The people who have lost their jobs are not the ones looking for houses, but housing has in some ways become a luxury good in America. Most affluent Americans are the ones who own homes. Home ownership rates are down about 10% since the great financial crisis. So we're seeing the people who have money buying houses in force and the inventory just being very low. So there could be another shock to the economy. Everyone's worried that this coronavirus will come back in force. And if that happens, I think it'll really take its toll on the housing market. But for now, buyers are coming out of the woodwork, and sooner or later that will lure sellers into the market just because it's driving prices up. People are gaining confidence that they can put their home on the market and really sell.
You look around the country.
Now, before we talk about the areas that he thinks we're going to see this kind of boom in, I want to pick on something that he just specifically said. He clearly called out here. Right now, real estate is solid. And this is reiterated by the data that we've been looking at. The data we've been keeping an eye on says real estate prices are flat right now. However, he said if we see a second wave, we could be in for substantial difficulties. I believe that because a second wave is going to create a significant uncertainty that, oh my gosh, we thought if we hunkered down for, 30 days or 60 days, this would be gone. if it comes back in force and we have to do it again, this is never going to be over until we have a vaccine, which we know could take as long as 18 months to 24 months for everybody to actually get. That's not very good. That's bad. Now, the good news is it seems like the Federal Reserve and Congress are steadfast at continuing to help with mortgage forbearance. So I know that seems like we're kind of kicking this foreclosure crisis can down the road. But I don't necessarily think I see a foreclosure crisis. What I think is happening more is people who don't have jobs have to sell and remove the equity that they have, take the equity, the money they have in their houses and run basically, even if they're in forbearance. If you don't have a job anymore, you're like, you know what, let me just take my money out and sell. So you're gonna have a lot of sort of these optional sales that come up during the forbearance period. And that's going to slowly tick prices down. Now, if prices fall substantially, could that now unlock foreclosure issues? Yes, at that point. But I don't actually personally believe that forbearance is going to lead to foreclosure crises. But fear and consistent job loss might lead to prices coming down, and I think that's what Glenn is referring to here. Now, let's continue on, because now he's going to localize where he thinks we're going to see problems, and this is very important. Here we go.
Yeah, well, I'm worried about the big cities. If you look, Americans who are working from home for the first time, 1 in 4 say they're not going back to the office. And half of those people say they're not going to pay the rent to live in New York, San Francisco, or even Seattle. So we expect there will be something close to an exodus from these really large cities where housing is so expensive to places like Charleston or Madison, Wisconsin, or Boise, Idaho, places where it's just more affordable and you can still walk around town a little bit. That's where the search traffic has already shifted on our website. If you look where people are searching on redfin.com, it is overwhelmingly in small towns. And that's even when the search traffic is coming from the big city. So that's what I'm most worried about, is that the big cities really have to get it in gear to make housing more affordable, or people are just going to go.
I could honestly not agree more. And that is scary for some larger cities. There are, in fact, as a real estate broker, I get a lot of people regularly that ring me up and go, Kevin, I want to get out of the hustle and bustle rat race of LA and I want to move up to the county of Ventura, which is more of kind of like that beachy surfer kind of county compared to LA's hustle and bustle. And the problem here is when you have Jack Dorsey and CEOs of companies like Twitter and other big tech firms starting to say, you know what? Half of our employees can now work from home. Well, employees like that. And guess what one of the most competitive kind of employee is? A tech worker. It's so competitive. I don't know if I'm actually going to be able to pull it up during this video, but I have it. It's right here. It's so competitive, and this is such a fluke that I have this up right here, but it's so competitive that this is Amazon's annual filing. Yeah, I'm literally such a nerd that I randomly have this 10K right here, which is right next to the Heroes bill. But anyway, I highlighted this because I almost lost my mind when I read this yesterday, because I thought to myself, if you're looking for a job or you need a job, this is where you need to be. Let me just read this. It says, employees on Amazon's 10K. Competition for qualified personnel has historically been intense, particularly for software engineers, computer scientists, and other technical staff. Well, if companies like Twitter are coming out and saying, hey, you know what? Y'all could just work permanently from home. Just get your work done and you could work from home. Well, now they can get a much bigger house and go invest outside the big city. Now, instead of just having one place that they're renting or owning, they can invest outside the big city, own their own home, maybe get some rental property as well, like I teach you how to do in my programs, how to buy below market value real estate, and actually really build your wealth now as an engineer. But what's that going to mean for real estate prices in big cities? Well, it ain't gonna be good. It's gonna be an issue, potentially. Now, I think there will always be a desire to live in big cities, so I certainly don't expect we'll see long-term crashes in cities, but I do think the higher-end real estate market is going to suffer. So, for example, take New York City, which they end up referencing in this video. Take New York City, their median home price is $999,000. I don't know that the median needle is going to get shifted a lot because people are going to see drops in prices in New York City as an opportunity, but that higher end's going to get spanked, in my opinion. That 3, 4, 5 million plus, that's where you're going to see larger, substantial falls. But this is going to be very interesting. So if you're near sort of one of these outside suburbs, you might expect more appreciation. And ironically, even though we're somewhat thinking there might be a decline in prices with the second wave, you might want to get your foothold strengthened and start becoming a landowner, especially if you can get in buying below market value to insulate yourself. Again, like I teach in the program's link below. Use that coupon code right next to getting your 2 free stocks with Webull and life insurance. Okay, let's go back to the video here and see what else there is. Heads up, I fast forwarded a bit. I didn't want to play the whole thing. Basically, he's talking about how telecommuting has already, before the pandemic, caused prices to soften in certain areas and grow in other areas. But here's more about what he says on this.
Seattle was losing people to Portland and Austin, Texas. So the major cities were already losing people prior to the pandemic. And some of that was because of virtualization, where folks were telecommuting from other cities. And now I just think it's a really strong trend that people are going to stay at home in some cases. I can't wait to get back to the office. Not everyone's going to do that. And I love cities. I live in the center of a city. I love New York too. So I don't want to bet against those cities in some permanent way, but I do think that the search traffic and the long-term trend are both pointing in the same direction, which is outside of town.
You know, another trend that may emerge and may prove to be lasting, Glenn, is that people may not want to travel more in the way that they used to. I mean, right now, the idea of staying at a hotel is not really appealing to me. Are you finding that there's been an uptick in interest in buying vacation homes?
No. So if we were to look at the one group of people who are selling in greater numbers, it would be people who have investment properties. So if you are renting out a place on Airbnb, right now it is just costing you so much money. It used to be that you could get somebody to pay your mortgage in the second or third week of every month. But now the challenge is that none of those people are traveling. And so the owners of those properties are listing them in great numbers. And in some ways, you can almost see Airbnb's loss as the gain of some of these iBuyers that are trying to provide liquidity in these vacation markets.
So that's the opportunity potentially. Glenn, always great speaking with you. Thank you.
I could not agree more. So let's wrap up on that. This is very interesting to me. So we noticed that he also reiterates, hey, you know what? It's not like you can say that now big cities are going to get crushed long term, but he's suggesting that what's being lost in cities appreciation is being moved to the suburbs outside the cities. So again, good opportunity for you to maybe think about getting in. Obviously, I totally get it if you're not super confident, especially with what's going on. So make sure to stay tuned to the channel and I'll keep you updated. Of course, you're welcome to join the programs, and I live stream about my thoughts on the real estate market every day at 9 a.m. when the market is open, so you're, of course, invited to that as well. Now, regarding the Airbnb comment, this is big. One of the things I've been talking about in my program is an exodus from Airbnb. Because of this exodus from Airbnbs, once travel returns, which might take a year or two, there is going to be an opportunity to provide Airbnbs again. It's almost like all of the rated Airbnb sellers, maybe like 80% of them, were potentially wiped out. And now there's that opportunity to get in with all of them again. It's kind of like when you play, I don't know, the video game Rust, and everybody has to start over on wipe day. Or I don't know, you play like RuneScape or World of Warcraft, and everybody just starts over because it's the new expansion, you know, RS2 came out, or the TBC came out or whatever, and everybody starts over together. It's like equal playing field again, right? So that creates a long-term opportunity to potentially get back into Airbnb in the future. A lot of strategies at play here. Make sure you stick around, hit that subscribe button. I'm all for providing a perspective and getting your noggin thinking. So thank you again so much for watching. Get your stuff in the links below. You know what's down there. Check out Lauren's vlog. I'll link that down below as well. She posted another video. She would love it if you went and gave her some support. Anyway, thank you so much. And folks, we will see you soon.